Hello to everybody, FutureTrend channel is again with you. Today is 7th of June. We start our everyday's analysis of different currency pairs. What's interesting today in the foreign exchange market? First of all, we'd like to emphasize the fact that the euro is very well supported at the moment because of speeches of several members of the European Central Bank. Prayer, Not, as well as Weidman, all of them told that the possibility of exit of the European Central Bank from its current ultra-expensive monetary policy is still on the table. And at the next meeting of the European Central Bank that's scheduled for the next Thursday, they will discuss the possibility of exit from this kind of monetary policy, and of course that's laid the ground for the euro dollar to appreciate. At the moment we see that euro dollar, for example, is trading around 118, and the next resistance barrier for the euro dollar, for the euro dollar located around 118.30. More important from a longer term point of view, of course, remains the level of psychologically important barrier 120, where also lies the moving average 200 daily line, at the moment around 120.10. Of course, from the point of view of short-term trading, the euro dollar remains in the bearish frame, and any kind of continuous appreciation in the currency should meet stronger offers on the upside, and any kind of rebound to already mentioned level of 120 should present a short-term selling opportunity for the currency traders. We suggest anyway that is not everything is so simple at the moment for the euro dollar, because a lot will depend on the next ECB monetary policy decision and following press conference by Mario Draghi. Because if Mario Draghi told that the ECB members suggest that current weakness of economic indicators in the eurozone they are more or less temporary, that will mean that the ECB is still ready to exit from currently ultra expensive monetary policy, and even to raise its benchmark interest rates at the beginning of 2019. In that case, the euro could receive a kind of additional boost and could appreciate really very fast. As regarding other currencies, the dollar yen that's tested the moving average 200 daily line around 110.20. At the moment is trading at 0.9995. And we'd like to say that also here the dollar yen is supported at the moment because of underlying factors of for example, of the next Fed's meeting scheduled for next Wednesday. And as you know, the majority of market participants still expect the Fed will hike rates. We suggest that this hike is already priced in by the market. From that point of view, the factor of such kind of phenomenon like buy the rumor, sell the fact should play its role, and probably nearing the Fed's meeting next week, the dollar yen could tend to the downside again. As regarding sterling, we also here changed our strategy. Now we prefer to buy the sterling on a possible dip to its immediately rising uptrend line located at 33.20. Also here, taking into account that last portion of economic data coming from the UK were more or less good, we suggest that sooner or later the cable could resume its underlying bullish sentiment. As regarding the dollar Swiss, we still prefer to stand and look for a possible test of the moving average 200 daily line located at 97.08 in the nearest future. Don't forget that consumer price index that was published, the Swiss consumer price index that was published yesterday, was at 0.4%, better than the market expected. That means that even the Swiss National Bank sooner or later should mull the fast increase of its benchmark interest rate. Just for your information, the Swiss franc has probably the lowest interest rate among the major currencies at minus 0.75%. As regarding other commodity pairs, as we already told, the euro crosses also should remain supported in the near term because of last verbal speaking by ECB members. We see that in the euro yen as well as euro sterling and euro Swiss, all these three pairs are looking rather buoyant at the moment. Probably as regarding, for example, the euro yen, it should meet stronger selling interest nearing the level of 2018 downtrend located at 131.20, 131.30. That's why we will use an opportunity of testing of this barrier to sell the currency. At the same time, we will use a possible downturn to below 128 to jump in the bandwagon of rising euro yen, because we suggest that the European Central Bank eventually could be rather hawkish at its next meeting on Thursday, and from that point of view all euro crosses should remain supported in the nearest future. The same applies, by the way, for the euro sterling. We suggest that sooner or later euro sterling will break above its 2017-2018 downtrend that's located today around 0.8810, and that will mean that probably the euro sterling could receive a slight boost in the nearest future. Subsequent closing above 0.8837, where lies moving average 200 daily line, should also accelerate the possible rebound in the currency. And we'd like also to note the fact that commodity block of currencies at the moment looking a little bit better than before against the United States currency. As you know, Australian dollar, this currency is looking probably most best of all among this kind of block of currencies. And we suggest that in the nearest future the pair could extend its rebound to the level of 0.7650, where lies moving average 200 daily line. The same applies also for the New Zealand dollar, which could also extend its rebound to 71.20, 71.50, where lies a stronger resistance barrier. As regarding the dollar Canada, here a lot will depend on the trade war between trade relations between Canada and the United States. From fundamental point of view, the Canadian dollar should remain very well supported in the nearest future, because everybody is expecting another interest rate hike from Bank of Canada at the next meeting. But here, of course, the Canadian economy is suffering from trade relations with its neighbor, United States, because, as you know, the readiness of United States administrations to exit from the NAFTA negotiations, of course, should not bode well for the Canadian economy and for Canadian dollar itself. At the moment, that's all. For those looking for our strategy list in the commodity block of currencies, here it is. Thank you very much for all of your attention of our channel. Bye bye for now.